right. And it was quite the bloodbath yesterday. Yeah, 2,700. We're still up just a little bit on the year, but big things that got hit for me was like Oracle. I mean, everything across the board, but it was really Oracle that really actually punished me the most. That one, not to feel good. And today we're getting. I don't even know if we get a bit of a bounce. It doesn't really. I'm not feeling it. It doesn't really feel like we're in a bounce type of thing today. Yeah, to me anyway. So, I mean, is anybody surprised though? That's what I really found that just looking around, no one's surprised. The only people who are surprised is I sit there and watch MSNBC and like they're all sitting around like, oh, what happened yesterday? Well, gee, all the stocks that got annihilated have been up like ridiculously, especially in like the last 3 or 4 months. So like, what's the surprise? I don't know. No surprise here. So that's it. So it looks like the ES just went red. It may have went red. It looks like it went red. Or is this from yet? This is from yesterday. Yeah. I mean, we did bounce off the lows yesterday. We didn't close on the lows, which is, I guess, a good thing. I don't even know at this point, but I would guess that is probably a good point. I marked yesterday 59.73. We bounced. There's this big wick that we had. But we bounced twice there, and that's where we kind of built support. And I'm going to use that. And what's funny is I marked that yesterday, and that is S1 today, right? It's crazy how that crap kind of happens. Well, I'm not using the force, and I don't have any special indicator. I just saw the double candle on the hourly and, saw where it stacked and put an alert there. And it just so happens that is S1 today. So I'm going to be looking at that one for possibly another bounce. I mean, if we kind of lose that today, who knows? If we lose that today, right? We lose that today, just like the last time. S2's 59.36. I don't know if I'm really a fan of that. Going back to the 15th of January, we gapped up pretty quickly and heavily there. And I do have this, I guess I have to use it. So 59.36 to the downside. As a couple of if we get down and we hit S3 58.75 and we get in the 5800s, I'm not going to step in front of that because that would mean that we're in free fall, and this thing is, who knows where the hell this thing goes. Who knows where it goes, right? The only ones who know is the market and I don't even think the billionaires know at that point. So we are definitely chopping around. So that's kind of what I'm seeing on the downside on the ES is just two spots that are particularly interesting. To the upside, as far as shorts are concerned, I'm going to go with S2, 61.30. Now, that's another 30 points away from where we're at. Um, and the pivots are very wide because we had such a huge range yesterday. So that's going to be one spot that I'm going to be looking. I don't know about R1 today. I think if we get up to R1 today, again, it's going to really depend on how we get to R1. If we kind of drift up today to R1, I'll take that trade. If we get momentum and we go and we rip through R1 with momentum, I'm going to stand aside. Chances are we'll fill the gap. And that will actually set up. So, that's the game plan for me today. So if we do run with momentum through R1, R2 is going to set up real nice, in my opinion, for a nice short. All right, and then R3 is like off the charts. If we hit R3 today, it's a good day for everybody. Everybody eats, right? At least the longs do. I don't know who's short. It's kind of a weird day out of the chute. I mean, here we have stocks that are relatively weak. I'm looking at bonds, and they look like they're kind of getting hit now. We got bonds that are actually back down below 113, below 114, 113.30. And just kind of a weird overall thing. Now, I know there's a lot of things going on with the Fed, and I don't even know. Let me look real quick because I don't even know what econ is coming out, to be honest. I have no idea. I haven't really watched it. Today is, nothing really earth-shattering. Durable goods. And that's it. And then what? Housing price index, which again, I don't know if that's going to be anything that moves. Fed services. I mean, there's some stuff that I just don't know if it's really going to move anything. APIs tonight. Right. I'm not really seeing anything on that front that's going to move anything. I know there's a number of earnings. I looked at them. There really was nothing. And then the problem with this earnings calendar here is that this lists everything, and I don't really care. I don't want to have everything, but it looks like, okay, so we have some big, I know there's some big ones today. Like Boeing's on deck to release. So is Lockheed. I don't have positions in any of them. JetBlue, RTX, Chubby. Yeah. Right. Yeah, so that's what's going on this morning. And then as far as tonight, I'm going to have to take a look. So that's kind of the story on the overall markets. Now, one interesting thing, and I didn't look at it, but a little birdie told me, and it wasn't really a little birdie. I seen someone say, they said I'll get it out. The equal weighted S&P 500, which takes into account the equal weight across all 500, was actually up yesterday, or not as negative, and it was not even down hard. Actually, I think it is up. Was up on the day. Yeah, it was up point. Now again, what's the significance of that? Is that a lot of people have been saying, like, if you take the S&P and you take out these big names, is the S&P really at 52, whatever, 50? I don't even know. Isn't that sad? Somebody asked me where the S&P is last night, and I couldn't even tell you, like, what it was, because I don't even look at that number. Like, it means nothing to me. Honestly, as crazy as that sounds, like when I trade it, I don't even look like, oh, this. I just kind of like, yeah, okay. It's just a market that I trade. It's weird. I couldn't even give them a number. I was like, yeah, it's like 6,000 something. I did. I like really like drew a blank. I'm like, you know what? I don't even know. Like, I don't remember where the price of any stock is like after I walk away. I just don't. It just makes no significance to me. So anyway, like you take out some of these big stocks, Microsoft, Meta, Google, Apple, and Nvidia, to a lesser extent, Tesla, Amazon, right? You take these out, these ones in bold, and all of a sudden you have a different picture and you have a different market. And, it's kind of scary to think about, but is the market really at 6,000 if we take out those 10 big stocks? Probably not. Probably not, because those have actually carried this whole thing, including some of the other indexes like the Dow and the rest of them. So it's not, and the Dow was actually up yesterday, and that was in large part because of Apple, but also that it's not as heavily weighted with all the tech stocks as much as the S&P now, because and all the indexes are like that now. It's kind of nuts. It's kind of nuts. It's NASDAQ and S&P. It's like they should just call it the techie 10. Come up with an index that's just those 10 stocks. Probably be a different animal. I'm sure there's somebody who's got an ETF, right? I don't want no ETF. But just anyway, something to put in perspective that I thought that was quite interesting, that this thing was actually up, this VU. I don't trade it. I don't own any of it. I know a lot of people are like, that's great. To me, if I'm going to go buy an equal weighted ETF on the SP 500, I'll just go buy the stocks myself. Like, not that I have enough money to go buy all 500, but I don't really see any reason to buy an equally weighted index. Because I want to be able to take advantage of those sector rotation, because I don't own any index. I own no longs physically, like in stock, of any index, whether it's the S&P, whether it's the Qs, whether it's the Russell. I just trade the options. If I'm going to go and buy anything like that, I'm just going to go buy the stock, or I'll just buy a sector ETF and just have a couple of them. I mean, honestly, because I just don't see I see no benefit to holding on to this long term. Now, I know it looks great on the chart and all this other stuff, and it's smoothed out, but I just don't see it. But anyway, I thought it was an interesting thing that it was up. And yeah, I don't know if I can put that on the heat map. I don't think I can. No, you can't. That would be interesting to see that on the heat map, but it would look even, right? If you put that, but I don't think you could do that. So that's kind of the story there with the markets. And then, it was a bloodbath for me yesterday, quite a bit. I mean, it didn't matter what it was, everything, utilities, my Tesla, and I got stuff across the board. Campbell Soup was even a piece of crap yesterday, right? You'd think that something like that would actually had some like value to it, because I know they rotated out of a lot of the tech stocks, and they rotated into a lot of things like, I think XLV, which is the healthcare ETF, actually I think did it have a good day? I think that was actually even up yesterday. Yeah. So, just some interesting developments on how they rotate. Target, I think, was up. Target was up yesterday. So there was some stuff that was up and kind of bucked it. Like, I mean, Target, I don't think this is really a great growth story, honestly. Target, I don't know. They just don't seem to be able to get out of their own way. What happened to my screen? I lost my screen. Sorry. I don't know if that's really a growth story or not, but I'm just pointing out that there were some stuff that was up, and then some other things not so, I guess, AI, right? Anything that was invested in AI got pretty much demolished yesterday. But then you had other stuff like CRM, Apple, Meta, Mongo, Datadog, even Adobe, the big piece of shit Adobe, Amazon to a lesser extent, like some of like, I guess, not so much the developers, but maybe more of the consumer end of AI. I don't know. I'm reaching, folks. I have no fucking idea what happened, but I mean, but that appears to be what kind of people rotated in. I shouldn't say people, but that appears to be what, you know, the market in general rotated into, was more of those names, and got away from more of the developers and creators of AI, and went and focused more on the consumer end of AI, as well as many of the other like consumer staples. Like if you look at the heat map, I think consumer services and consumer staples were actually relatively green all day. And consumer non-durables, Procter and Gamble, Pepsi. The ones that these are the stocks, like these consumer non-durables are kind of the stocks I say, like, go open your refrigerator, right? Or go when you go shopping at Costco. It's like all the shit you see sitting around on the shelves, that type of stuff. There's definitely a rotation. You even had like the Depot, and speaking of Costco was up. So you also had like retail, which kind of had a little bit of resurgence. So really interesting. I mean, does it continue, and do we see this rotation? And, you know, is it kind of like the slow death for tech here going forward for I don't think it's over by any means, but at least maybe for the next month or two until they consolidate a little bit and maybe come back down to earth. Because let's face it, like the move has just been ridiculous. The moves have been just absolutely ridiculous. All right, so that's kind of my whole spiel there. I mean, I really don't know what else, but you have to trade it. And I actually did. I actually got long some. I did some NVIDIA. I put on an NVIDIA trade yesterday. Outside of some of this, just look at my options trades. I threw on an iron condor yesterday in March. I did a 160, 165, 110, 105. It's a little skewed, delta positive, but I figured, hey, what the hell? I mean, it's down. But I also sold some stuff to the upside because I don't know if these things just bounce miraculously back with the veracity that they once had. I think perhaps maybe a lot of that momentum is gone. I don't think it's not that they couldn't be back to where they were in 6, maybe 8 months, but it's not going to happen in just a couple months. But then who knows? But I did. I put on a couple of trades. I actually did some NVIDIA. I also did some CCJ. I sold a put spread in CCJ, which is Cameco. And I saw some value there. Good IV rank, 74.6. There was some pretty decent, I saw some headlines yesterday too, didn't I? I don't see them here. I don't see them on here. I saw them on, did I saw them or I'd seen them? I don't know, whatever. Seesaw on another news service about construction and all this other stuff. So I was like, okay, why not? It's down. If you look at it on the chart, it really got absolutely demolished yesterday. I mean, it was down like $7 yesterday. It was up over 52. I was like, you know what? Why not? If it holds here and it bounces, it's a nice trade. And with the put spread, at least with the put spread, I did the 45-40. With the put spread, at least I have a bit of a cushion even to the downside. If it continues to go down, I'm not going to get completely wrecked. I think I was able to bring in $1.25. Yeah, I brought in $1.25 credit on that. And that was really the only trades. And I took a bunch of trades off yesterday, which some of my shorts actually came in pretty nicely. But surprisingly, UAL, what is up with this stock? I'm getting kind of creamed here a little bit in this. I'm short the 100, 105 February call spread. And this thing just continues. Like yesterday, I'm like, all right, here it comes. This thing's going to get whacked. I'm going to be able to, get out of this or at least roll it. and nothing. And it was actually, I think it actually bounced and ended up going up. I'm like, what the hell? Anyway, yeah. And so with that being said, let's just look at earnings real quick, and then I have got to go. I don't know. I'll tell you this: the earnings plays have just, in general, have all just not looked interesting. So I'm looking now. I don't see. Did Boeing announce? Because I might do a. Lockheed looks like they announced. I see that on the tape. I don't really trade Lockheed. It's kind of a slob. Tis a slob, Boeing. It's kind of a slob. And it looks like it's up $1. They had to have announced by now. Brief Boeing reports core operating loss. Yeah, of course. Deep breath after AI jump. Boeing reports $11 billion loss. Oof. Oof-ah. So what I'm going to do here on Boeing is what I like as an after earnings trade is I'm going to do a little call spread. I'm going to go out to April. I'm going to go in the money. I think I'm going to do, and I got to see, it's up about $1, but so I don't think these are going to be way off, but it looks like it's going to be about the 165 or the 170. Now, I always like to do about the 60 delta when I do a call spread. It's just what I like to do. I just find that to be the sweet spot when it comes to buying a call spread. But before I do anything, I want to make sure that this IV rank kind of like dips after earnings. So I'm not going to do it right away this morning. But what I am going to do is probably wait till about 10 o'clock, let that volatility from the open and the earnings and let it kind of bleed itself out and then see. And I'm hoping that this IV rank gets under 30. And if this IV rank gets under 30, it'll be in the wheelhouse. If it's even less, even better. And I'm going to probably either buy the 160 or 165, $5 wide call spread. And I'm going to look for anything that's delta 60%. So anything that's near 60. So whatever it is, if it's this 170 or the 175, anything that's close to 60. In this case, it's going to be the 170. So it's just going to be a 170, 175. It's going to cost you $270. You got a 54% probability of profit. You got till April. So as long as it stays over 175, you're going to make money in this. And the reason I went in the money is because I do not want to have theta. Now you can see there's literally like no theta burn in this. So I'm not going to lose money the longer this sits at one price. If I go out of the money, I have to worry about that. That's why I try to tell people that. And then they say, oh, well, I bought these calls and, the stock went up and I didn't make any money. And I'm like, well, which ones did you buy? Did you follow some jackass on social media and bought like ridiculously out of the money options because they were cheap and you were expecting it to go up 30 or 40 points and it only went up 10? Or maybe it went up 30 points and, volatility got sucked out the day after you bought it. And guess what? You got caught in a volatility squeeze and now you're screwed. That's why you didn't make money. So if you're going to buy options, buy them in the money. Intrinsic value, look it up. You just Google search it. It'll come up. It's an amazing thing. So anyway, there's the Boeing. Nice small little trade, the 170, 175. Again, it's the 60 delta. So whatever's closest to 60 delta, just take that, strike, buy it, and then sell the one higher than that. That's what we're going to do in Boeing. Also, we've got Starbucks. I was looking at Starbucks. This stock just doesn't interest me at all. I own some. I have some long stock in it, but it just doesn't interest me very much because it's never really been a very good trade. I don't know. What do they rate it on the what do they rate it on the liquidity rating? It gets a 3, so that's actually not terrible. But I've always found the markets in Starbucks suck. Yeah, they're a little wide. They're a little wide. I mean, you have almost 50 cents here, 20 cents, 18 cents. They're a little wide, 10 cents. I mean, not horrible. Like, look, not completely horrible. A lot of open interest up and down the chain, especially in March. I don't know if I'd be bullish on this stock. Let's take a look on TradingView real quick and I'll pull that one up because that might be a good. I kind of like that one. I kind of like Starbucks short here on this run. Yeah, I see a lot of I mean, look, if you want to let's play third grade here for a minute and do right. A lot of resistance up here, I think, in my opinion, at 103 and change. Really got to get up over that before this thing really gets any momentum. It's currently trading at 91. Is it 91? I don't even know where it is. It's 99.34. They had to have announced by now. They're always busy. Did they announce? They should have. But anyway, with that being said, I kind of like it short, especially if it pops on earnings. If it actually gets a pop, it's actually down. It looks like it hasn't done anything. So I don't know if it announced. No, they come out. What an idiot. I'm an idiot. I'm after the bell. After the bell tonight. So it comes out tonight. So we could do an earnings trade. So let me do an earnings trade in here because volatility is really good in here. IV rank of 76. I don't think I'm going to do. Let's take a look at the Februaries. The Februaries have 24 days. Let's see. The one standard deviation strangle would be about a 90. Wow, a 91.10. Wow, damn. You're not going to get a lot for that, even though volatility is up there. I mean, a one standard deviation strangle should yield you a hell of a lot more than $1. I mean, you're getting $1.20. That's not horrible. And I would think that before this thing, I would think today that this particular iron condor is probably going to look pretty nice. You'd probably be able to sell this for about $1. I bet you could sell this for $1.30 tonight. So there's your trade for tonight. So if you have the capital, do the 91.10 strangle. And if you don't have the capital, which I'm not going to, I think uncovered. Let me take a look because I'll do this. Let me look in my margin account real quick because I'm in my IRA. I do everything in my IRA so I have to pay taxes, right? Learn to do that, folks. It's really a powerful thing, man. And I'm guilty of it. I'm guilty of it for years, and I'm going to be almost 60 years old. And just 2 years ago, I started extensively trading just in my IRA, and what a complete difference. No tax ramifications. I didn't question anything I'm going to, every time I wanted to take a gain, it was I got to fucking pay tax. Oh God, tax. I was like, oh, screw this. Trade in your IRA, man. I'm telling you, trade in your IRA. It is the way to go. It is definitely the way to go. So anyway, the 110.90 strangle is going to run you about $1,000. And I would think that by the time tonight rolls around before earnings on this, you're going to be able to do this for $2. And that's not a bad trade. I'm going to look to put this one on. So this is the 91.10, 74% probability of profit. These are in February. Decent theta burn here, right? Because we are in February, and this is about as delta neutral as you can get. And it's outside the expected move. Expected move is, looks like it's what, $8 or so? $7, $7.80. So that's what you would do in February, and try to do that for $2. Do that tonight. Now, if you don't have the capital, I'm going to try and do the 90. I'll do that in my trading account. Now, I'll do this one in the IRA because you have to do this one covered. I don't have margin in my IRA. I really don't want it, and I don't really. And this one I think you could do for like $1.20 by the time tonight rolls around, because you're going to get an increase. And why am I making these? Why am I just saying these numbers? Because what's going to happen today is that volatility is going to continue to increase in Starbucks all day. It's just what happens because they have earnings coming out after the bell. So volatility will continue to climb most of the time, right? And with that volatility climb, these premiums on these options are going to increase. And that is why I'm saying that it's trading at what, $1.10? You're probably going to be able to get 10 more cents out of it. So this is what I'll be doing in the IRA. Will be the Starbucks would be 90, 85, 110, 115 Iron Condor. Again, completely delta neutral, 70% probability of profit. Do that for 100. I would say try and do it for $1.20. And if you get more, then do it. If you can't do it for $1.20, don't do it. You're going to use about 380 in buying power. And these are the February options. And why am I sticking to February? Because you're going to get a little bit better theta burn on those. And I'm doing February because I'm trading a binary event. Now, if this was a trade or a normal swing trade, I wouldn't even be using February. Why? A couple things. You only have 24 days left. I usually like to have at least 40 to 45 days on my options when I put them on. Just what I do. And this isn't, but if I'm doing a binary event is earnings. And so with that and trading the binary event, I'm going to use February. Now, you could do this in March. You're going to get better premium. I just don't think you're going to be able to take advantage of the premium burn in the theta if you do this out in March. That's all. So I think you definitely do February. And then the other one is going to be Las Vegas Sands. And then you have all the bigger tech ones coming out on Wednesday after the bell, and we'll go over those tomorrow. Microsoft, Tesla, Meta. These are all Wednesday. Meta, it looks like an interesting one as well because that one's run. But all of these have had increased volatility. Microsoft, if you look at these on the volatility scale, volatility is definitely starting to bake in to these, especially after yesterday's big sell-off. And Tesla has stayed bid as far as volatility, although it did come in a little bit yesterday. So anyway, that's what's on deck for tomorrow. And we'll go over those there. So what I will try to do, if I have time, I will try and go live on today at 3:30 and put these trades on, put the Starbucks trade on. I don't really see, there's nothing else that's coming out that's interesting to me. I stick with the Tasty Trade earnings trades. They put them on the list. And usually if you stick to those will be the best plays to play for earnings. Are there other companies that are trading earnings? Yeah, hell yeah, there's a whole bunch. But the issue is that they're just not very good. Here's all earnings. A lot of them are just not any good for trading. And so why deal with them? Just because they have earnings doesn't mean that it's a good stock to trade. Like here's F5, right? F5 technology stock. You would think this thing is this is one of the biggest pieces of crap to trade. F5. I don't even know what its liquidity rating is. It gets a 1. Liquidity in this thing sucks so bad. I've traded this, man. And then you know why it sucks? Look at the open interest. Go to February. Here's F5. And this is why you don't want to trade a stock like this for earnings, because there's no play here. Look at the open interest. Like even up and around where the expected move is, there's not one strike here in February that has over 1,000 open contracts. None. And so why do I want to trade that? It's like trading a penny stock when it comes to options. So stay away from them. It's not worth it. Trust me, it's not worth it. Because it's real easy. I always tell people it's real easy to get in a trade because they're like, oh, yeah, I can get in. You know, oh, it's this, that. Yeah, it's great. Anybody, they don't give a shit, right? If somebody's selling a bad car and somebody wants to buy it, they don't care. But they're not going to tell you that, yeah, the engine isn't connected. The lug bolts for the engine connected aren't connected, you know. And that's why it's cheap. That's the same thing here. Like you can get into the trade. Try getting out. Try getting out of it. You'll pull your hair out. What little you have left, like me. So don't do it. It's not worth it. So always look at the open interest, and that's going to kind of tell you where the footprints are, right? I always say look for the elephant prints. The elephant prints in the option market is open interest. That tells you where the money is landing. And if it has no open interest, it's of no interest. So that's something you really, really got to look at. And then look at the spreads in here. Just to give you an example, you could drive a truck through these. I mean, this is almost $2 wide here. It's like, get lost, man. It's garbage. Garbage. Sucker's bet. All right, so that's it. That's all I got. And we will be back maybe at 3 o'clock if I have time, if I can break away from the real.